I want to do a video today about an ES strangle that I scalped. I actually scalped two of them. I entered one yesterday. What I look for when I'm scalping the ES is I'm looking for spikes in the VIX, and then I'll jump in a small position, try to get in and out of it as quick as I can. Got in one yesterday on this move down early in the morning. Over the course of the day, I was able to close it out for a very small profit. And then later in the day, the VIX spiked back up above 23, and I entered a second trade, which is the one I want to go over today. I just closed it out a little while ago for the target I had set. And again, not trying to make huge amounts of monies on these because I'm strictly playing the VIX spike. So it's not my standard ES trade that I usually make. Do it a little bit different. From a swing trading standpoint, if you were wanting to trade the ES, you can see some good entry points here and here, and even here, except for the only problem is I really didn't like that candle, so I would be afraid to go along with a candle like that. And the same thing over in here, and I'm just giving that to you kind of as a reminder for those of you who follow my swing trading. There are other things you have to consider when looking at it, but it's really not what we're talking about here today. Today we're talking about the strangles and part of the ES strangles that I do and part of the strangle ladders that I do in futures, trying to get a certain amount of income each week. I did not give this trade to the people in the members group just because I did 2 contracts, and I usually allow $10,000 per contract in buying power. It was actually probably closer to 14 that I used for both contracts, 7,000 apiece. But if these go against you, that they can eat into that buying power pretty quick. So I try to always use about 10,000 each per contract. In the members portfolio that I'm doing, I'm trying to be more conservative, so I'm trying not to do these unless they're just really no-brainers, just because of the amount of buying power they use up. So let's take a look at the VIX. You can see what I was looking at. Yesterday got this huge spike up. And like I said, I entered and got out of a trade, and then entered another trade toward the end of the day when it was actually it's probably about right here when I got in. I had before I had a alert set at 20, 21, 22, and 23. When it hit the 20 is when I entered an ES trade that I still have going on. I did not enter when it broke the 21 here, mainly because it broke it and then it pulled back. And then, of course, the next day I opened and we were up here, so I went ahead and got in one. And even going back to my swing trading, if you look at where we're at on the VIX at this third Bollinger Band, up here at the Skeltner Band, and so far away from your moving averages right here, you can kind of expect a pullback at some point. Now, yes, the market could, completely fall apart and you could get stuck, bouncing around up here. That can always happen. But overall, I think you can expect a pullback when you're looking at something like this in the VIX. So I try to take advantage of that by entering some ES strangles that I just want to scalp. And since we're talking about the VIX, I also entered a covered call position in Google yesterday because of this spike in the VIX. Anytime I get these spikes, that's when I like to make trades because I sell options. So I always like to make trades when the VIX is pushing these bands, hoping that I'll get the pullback later and can make money. So I did enter a couple of trades yesterday in addition to the ES strangle. The Google trade was a members trade for any of you that took it. I'll keep you updated on how that's going, but so far today it looks fine. So let's take a look at the actual trade sheet. And this is this was the second one I entered. You can ignore all this because I'm scalping these, so I'm not really following any of this. And truthfully, I've kind of changed the way I trade the ES, and I try to go over 45 days, not stay close to it, and I rarely look for 50%. This 20% range is more what I'm looking at. But as you can see, I entered it. I sold the 44.80 call and 32.75 put. Got 11.25 credit on it. In this particular account, my commissions are pretty high, which really eats into my profit. Not really happy about that, but this was the account that I had the buying power in, so I went ahead and traded this account. And I do use my real commissions when I'm showing these, so you can kind of get an idea of what you would really have to pay. Closed it today. I'd put a good to close order in at 10. It closed out today, so I made $100. It's a 51% on my risk, but I was only in the trade for a day. It was a fairly high probability trade just because, again, I expected the VIX to pull back. It's 186% annualized because I was only in it today, which sounds great. But overall, it was a good trade. It's a way I do scalp the ES when I get VIX spikes. I'm very picky on those, and I really try to watch for them. Try to get in and out fast. If it started bouncing around too much, I might even have closed at break even, just because this is not one of my normal strangles that I would do. It's strictly a scalp. It's strictly based on the VIX. Just get in and out. You can ignore this up in this area too. This is sometimes what I use to determine what my percentages are that I made on these. If you have any questions, let me know. Please subscribe to the channel. Please like this video. Questions are always appreciated. Please watch some of my other videos and let me know what you would like to see videos in the future. Thanks.